America is one of those countries where people traded in family in exchange for things like corporate jobs and student loans. You have a lot of people that literally didn't even have kids because they were so focused on their work. And I'm not really sure if that's healthy. I don't think that's the kind of balance that you're supposed to have. And what it does is it shows itself in unhappy outcomes in terms of mental health, a lot of mental health problems. It shows up in terms of physical health problems, a lot of people dying of cancer, dying from preventable illnesses. It shows up in the form of bad relationships. The divorce rate sky high, and nobody's really working to fix that. So these are some things to think about. So having two incomes is better than one, but you knew that. You knew that two was greater than one. I didn't have to tell you that one is less than two, right? You knew these things. So anyway, that's the first benefit. Second benefit is tax breaks. How many of you knew this? Give me a yes or no in the chat. How many of you knew that married people get tax benefits that other people don't get? Married people, they can file jointly and get access to credits like earned income credit, stuff like that. So the government actually incentivizes marriage and family by giving you breaks on your taxes. If you can reduce the tax bill, that makes a big difference in your economic outcomes. Number three, shared expenses and what they call economies of scale. Now, what's economies of scale? Economies of scale means that if you have two people in the household instead of one, or two income earners instead of one, that you can actually have an outcome where the bills don't go up as high as the revenue. So you double your revenue, but you're not doubling your bills. Let me know if you get what I'm saying. So you move two people in together. I'm paying, 40,000 a year in bills. You're paying 40,000 a year. We're not going to pay 80 a year together. Together, maybe we'll pay 50 or 60, but our income will double. Do you understand? So, or if assuming we're making the same amount of money. So economies of scale is basically the reason that corporations merge. If you look at the theory of mergers and acquisitions, something I taught on when I was at Syracuse, something that I've studied extensively, what is typically looked for when two entities merge, whether it's two companies or two people, is you look for something called synergy. Synergy is where one plus one does not equal two. Synergy is not one plus one equals two. Synergy is where one plus one equals four. You understand? Or synergy is where five plus five equals 12, right? Because you're able to cut costs, increase revenue, expand and reach out to other opportunities because you have specialization and you have the kind of connections that benefit you economically and allow you to get where you want to get to. So economies of scale is a really important part of family economics that I really encourage you to tap into.